And is that rate, is it purely perceived risk of the bond, or is there also there's a whole lot in there in terms of the time frame and the in other market influences that dictate the appetite for the rate of the bond at the time?
Yeah, so that's represented. What you're talking about there is represented by the yield curve, and the yield curve moves to reflect the macroeconomic outlook. Um, so at the moment, and really in Australia, all the way through since before the pandemic, we've had basically a positively shaped yield curve, where longer rates are higher than short-term rates.
Sure.
In the US, there was a period there in 2023 where we had an inverse yield curve. So short rates were higher than long-term rates. And at the time, the economic interpretation of that is that the US economy would have moved into recession in by the March quarter of 2024. Now that didn't happen, and the bond market was wrong there to interpret it as a macroeconomic risk. It was actually the market was pricing the transitory nature of the inflation surge from the pandemic. Transitory is a little bit of a dirty word, given that central banks were using it and they then abandoned it. But that's actually what happened. And so the US yield curve is again now quite positive,
Mhm.
and it's steepening almost every day at the moment. It seems to get steep, and our curve seems to get steeper and steeper. So it's indicating a positive economic outlook.